Northside Bogos got it first.
Ты наебер, сука! Я один раз на эту хуйню повелся, иди ты нахуй наебер!
All right, guys, what is going on? What is good, man? I got some questions for you guys today. Oh man, do I got some questions for you guys today. I have some questions for the volume traders in the room. Oh yeah. Oh yeah, I got some questions, big dog. I got some questions. Do I? All right. Now, I say this with love. I say this with, you know, camaraderie, if you will, because we're all traders, right? But I have a genuine question, okay? Now, y'all know me, okay? If I want to know something, I'll ask, right? Marcus Aurelius, like a soldier storming a wall. If you have to ask for help, then ask, who cares, right? So it's like, okay, I need some help, right? I need to understand what the big deal about volume is. I need to know, okay? Because I have two main points that I want to share with you. Number one is we blasted the 1.1721 level. We talked about that yesterday. What did we say? We said nothing in here was bearish, right? So if it ain't bearish, where's it going? Higher. Ooh, real fucking hard that one was, right? Bam, blasted there, right? Before the market goes higher, what does it do first? Typically goes lower. I believe that is London's low here, right? And New York open is somewhere in here. I think that is it, if I'm not mistaken, right? New York takes London, low, high, lower, low. That takes the short-term low and a long-term low. Remember, I told you what the key was to high probability mitigation. It takes multiple pools of liquidity, right? So these two up those two up candles there, still below New York, right? Anything in the manipulation leg is tradable, right? Whether it be in here, like an inversion, or in here, or buying below that low, or whatever, right? And we absolutely mega monster blasted right through that shit, right? Now, again, with all due respect, we talked about that yesterday. No volume necessary, no tools necessary, other than time, price, and context, right? So there's point number one. Point number one is you see me call trades every week, need not volume, okay? Now, here's my second point. And again, I'm not trying to talk a lot of shit. I'm wanting to ask. I know a lot of guys in Trade House use volume, but I have a question, okay? Now, my research on this topic has been severely limited to one simple question that I asked ChatGPT about 3 minutes ago. Okay? And that's why I have the chat open, because if you like volume and you use it, right? Then great. But I need to know something, okay? So here's what I did. And I'm going to do my intro while you guys give me answers if you choose to. Okay? Here's what I did. I went right into ChatGPT. Okay? No history. And I said, I probably could have corrected my English, but this is what I said. And please, as a matter of fact, we should do a social experiment. You should go into, if you have a ChatGPT account, go into ChatGPT right now, pull up a new tab, go into ChatGPT, new, what is it called? New conversation or new chat, whatever, okay? This is the question that I asked. I want to see if it gives us different answers. I asked, does futures volume indicator include orders from interbank traders? That's what I asked. Does future volume indicator include orders from interbank traders? Here's what it said. The futures volume indicator specifically tracks the number of contracts traded on a futures exchange, such as the CME, the Chicago Mercantile Exchange. Right. No problem there. Here's the breakdown. Here's the breakdown in its context. What futures volume includes: trades executed and cleared on the exchange, and it includes participants like retail traders, hedge funds, institutional investors, prop firms, and banks or interbank desk trading directly on the exchange. Okay? Here's where my fucking question arises, okay? Because what this summary is going to slap you in the fucking mouth. What futures volume does not include: interbank OTC trades that are not cleared through the exchange. These are OTC is over the counter. These are over the counter deals between major banks, often done through platforms like the EBS or routers. Common in spot Forex and swaps, not in exchange traded futures. Another bullet point: internal order flow between liquidity providers and, or excuse me. So I've had a lot of caffeine. Internal order flow between liquidity providers or market makers unless they route orders through the futures exchange. Here's the summary. If an interbank trader places an order on a futures exchange like the euro dollar or FX futures contract on the CME, it is included in the volume, but OTC interbank transactions are not reflected in the futures volume. Here's where this is going to slap you in the fucking mouth. So the volume shown on your futures chart does not represent the full global picture of that asset, just the exchange traded portion. This is especially important in FX, where the majority of volume is OTC, not on futures markets. So that is what I have a question on. How is that reliable? I mean, I'm guessing it's, well, you combine the volume with price. Well, yeah, no shit. That's what every indicator does. You line it up, right? I get that, but I still don't see, if the important participants, right, the interbank traders, if you're not seeing their volume and they have the majority of it, then you're missing a really, really big piece of the picture. And that is the question I have for you. The chat is open to the internet today, right? If you have a solution, I'd really like to know it. I really would. So while you guys do that, if you choose to, now I can do my intro. Okay. What's good? Eric, MJ, Mason, 2020, Eminem, Zoc Joe, Pop, Jorks, Harmon, D London. Oh, I called you Demon or Damon yesterday. I thought that's what your name was, but I'll just say D. You got a D in your name. We'll just do that then. How about that? What's good, D? What's good? Lee Bright. 20 levels should be studied at Harvard. I should be a special guest at Harvard, huh? I should come in there and be like, everything you know is fucking wrong. Now let's watch buy programs and sell programs on a 1 minute time frame. Right? What's good? Cameron, Leon, Felix, Gig, Eric, Marshall, Young Flo, Warrior, Robert, Jordan D, Carlos, Scott, anybody else that I might have missed? Scott, what did Grok say about it? ChatGPT paid version also has a different answer. That's interesting. What did it say about volume though, specifically? When it comes to interbank volume. That's the question. Right? We know retail traders, hedge funds, institutional investors, prop firms, and banks are interbanks trading directly on the exchange. But I'm talking about the OTC shit, the interbank. I mean, does that get posted later? Does it update after hours, right? Like some dark pool shit? I mean, genuinely, I do not know. And that's why I'm asking. I don't get it. I don't get it. And when you can frame low risk, high reward setups on your own with time, price, and context, I don't understand the justification for using volume. This is an open invitation to teach me. I always teach you, right? You guys always get taught by me. Well, how about you teach me something? You know what I mean? I'm always a student, baby. I'm trying to know some shit. Right, Dow Jones yesterday, when I basically walked you through. Oh, good heavens. I'm glad I did not. Jesus, we're just gonna go back to yesterday because today's absolutely wild. I showed you the entries yesterday. Full disclosure, that was a paper trade. I told you I wasn't gonna trade, and I did not. But I did want to get some good practice in, and that was the entry at 650. So there was 2 points of drawdown. It went right for a new low, and then went for equities open low, and then even the 50 level below it. Right? Maybe you saw that screenshot yesterday. Right? I'm wicking in on that, out at a new low, out at that low, and then like one more low. Right? And again, with as much humility as I can possibly have, if you can enter on that and exit at new lows, what is the point of volume? Serious question. I'm not saying I'm better or this is you know whatnot. I'm genuinely asking. I there's a disconnect. I do not understand it. I don't understand space engineering. You know, I can't understand taking an engine apart and putting it back together. I can't do it. There's a lot of things I can't do. There's a disconnect, right? And there is a disconnect between the trust that people have with volume that I don't see. I'm trying to see it, and I cannot. OTC trades would neither register on volume nor price action. Surely there would be no reaction to the candlesticks on an OTC trade. You know, Cameron, it also, you know what? You do bring up a good point. Yesterday, I did not mention this, okay? I was going to, and then I was like, nah, I'll save it for the stream. When I told you yesterday in the chat at 211, that was right here. Right at 211, I said, looks like Dow wants to go for those lows, huh? And then we rallied into that and then went right for the lows. So I basically gave that to you. I basically said, hey, Dow's going lower, get on board. And that bitch went lower, right? What I did not tell you was why I thought that. And it wasn't just the lows. It's not just the lows, and it's not just final hour. Okay? Yes, that's like really, really big keys. But there's like a couple more things that you may not have heard of yet, or we probably have not covered a lot. And there is a term, I don't use it often, but the way that I learned it is it is a phenomenon called spooling. Okay, if we come back for a second, and again, we already did all this yesterday. You know, I'm not looking at a lot today. Euro already smashed. I don't, with indices today, I don't know what the fuck to do with that. So when you guys asked either, today's Tuesday, right? Okay. You asked either yesterday or last week. I don't remember who it was, but one of you asked about macros. And I told you every hour there's a macro, but I said the last hour is different. Drop some ones in the chat if you guys remember me saying that. Or don't. If you don't think I said it, then don't drop a one. Right? I can't control if you press the keyboard and the enter button or not. But if you remember me saying that, oh yeah, John, you said it's the last in the first 10 minutes of every hour, but you said the last hour was different. Do you remember what I said about the last hour? I may not have given it to you. I may have just said, hey, that bitch is different, and then moved on. It was good, Big James. Okay. The last hour is different, like I said. Number one, we have obviously the 2 o'clock macro in the 3 o'clock macro. The 3 o'clock, the last 10 minutes is actually called the MOC. Okay. That's why I told you, and it's in the Discord and it's in the Trade House Telegram. I said we may continue into the close. Now we did rally like 1 or 2 minutes off of it, but I told you we may continue into the close, and we pretty much got that into the last 2 minutes, right? So let me ask you this, okay? And again, with all humility as I possibly fucking can, I gave you the short before we got there. I then gave you the first TP, the second TP. I didn't give you the 50 level. And I said we may continue into the close, and then we did that as well. I absolutely walked price like a fucking dog. Like the way your neighbor walks your fucking dog across the neighborhood on a leash, right? That's very hard to do, isn't it? Not very many people can do that, huh? Walk price like a bitch. Which is a pregnant dog, by the way. I can slip in a cuss because it aligns. Now, why do you think that is? Right? How did he know it would go lower? How the fuck did he know it would do this and then that and continue into the close? How is that possible? How can one person fucking know that beforehand? Because again, Telegram as well as Discord are time stamped. They're fucking time stamped, bitch. They're posted before we get it, right? How do you do that? That's what I'm trying to tell you. Now, you probably didn't. There's 40 something of you on here. You probably didn't do this. I told you to do it. Probably didn't. I said go back and look at the messages for what they are, but also at what time I sent them. I gave our Discord the heads up way earlier than I did the Telegram. Telegram, I gave you what? At 2:29. What's special about 2:29? I don't know, John. It's just 2:29. Yeah, no shit. No shit. 2:29. What's right after that? 2:30. So what is 2:30? From 2:30 to 3 is the last 30 minutes. Yes? In the last 30 minutes, you have what? A 30-minute candle. And you got two 15-minute candles too. So what is happening right after at 2:29 when I said in the Telegram, I think it was Dow Jones getting crushed. Crushed obviously means lower. What is it trading up and into right after that? An imbalance. Right there. We trade lower. We trade higher. There's a very small gap in here, but it just stops on a dime and then runs lower and continues into the close. Like I said, it may do, right? Okay. The final hour is different for a number of reasons. And I'm going to try my best to teach it to you in the way that I know it. Okay. 2 to 3. Actually, we should start with that. We should start with that. Okay. 2 o'clock to 3 o'clock. This is Central Time, by the way. So if you're Eastern, you'd have to add an hour. All right. So 2 to 3 p.m. is the final hour. I wonder if anybody has ever made a video on that, right? Final hour finesse. I don't know. Sounds like a cool title. Bet you nobody's done it. All right. Final hour. Okay. Here's where things get a little bit tricky. All right. I don't trade this way a lot. As a matter of fact, I didn't even trade that yesterday. That's why I told you explicitly that it was a paper trade. It was very good practice. I wasn't willing to put risk on it. And I know that sounds crazy to some people. Well, I generally don't really care what you think, to be honest with you. MOC is the last 10 minutes. Okay. 250 to 3 o'clock, that is MOC. I told you that is something that you can look up. That is a real thing. It's not something I created. Okay? Thank you, Edgar. I mean, I don't call myself the GOAT, but I appreciate the comments. Right? I did all that yesterday, no volume required. That's why I'm inviting everybody to explain it to me, because I don't get it. I don't. That's what I was trying to explain, Cameron. The market yesterday for Dow in the final hour is what I view as spooling. And that will railroad every indicator ever. All of them. Because, and again, this is where my disconnect is. If the market is manipulated and the markets also run on an algorithm, that totally defeats the purpose of volume. It doesn't make sense. Okay? Spooling is a phenomenon where the market just keeps getting repriced lower and lower. You see that? You see how there was hardly any up movement yesterday? We just rip ass all the way almost into the close, right? That to me is spooling. Think of it like, and again, this is just the way that I view it. Think of spooling like the second leg of accumulation or the second leg of distribution. It's going to railroad everybody because it's going for liquidity. Okay? The final hour is different because you have the MOC in the last 10. You have 215 to 245. Okay? Now, again, I know I did not teach you this before. Okay? I did not show you this prior. So I'm not going to take credit for yesterday more than I already did. Okay? 2 o'clock to 3 is a 60-minute window. Between 2:15 and 2:45, in the way that I know, or in the way that I think and internalize price, is that has its own macro basically as well. Okay? Now again, this may be new to you. I don't talk about this a lot. I don't really trade in the final hour all that much anymore either. But that is a thing. 2:15 to 2:45. And then after 2:45, there's a very small 5-minute window where, to be honest, I don't know what to do with that. But from 2:50 to 3, that is the MOC. Are you guys with me so far? So drop some 2s in the chat if you guys are with me so far. Because this next part, I promise you, you're not going to believe it. I'm going to just say it like that. You're just not going to believe it. It's going to be so fucking good. You're going to say there's no way. There's just no way. There's no way. I told you to look at the times. You didn't. Now we will. Okay? Now we will. What time? Actually, we're going to redo this. If we remark up again the specifically the 2:15 to 2:45 macro, or time window rather. If you want to call it a macro, I guess that's fine too. Okay. What do you notice? Don't let your jaw hit the floor. Don't let your jaw hit the floor, chat. But what do we do? 2:15 rallies, imbalance. You remember in Discord where I'm shorting? Right there. 1 minute inversion, or sorry, 1 minute imbalance. It's not an inversion. Still inside that window. What time do we meet that low? What time do we meet that low, chat? We meet that low at 2:44. That's just inside the 2:15 to 2:45. Some of you might not get it. Some of you might not see it. I'm literally giving you the keys. Literally. And then we sunk a little bit longer, right? But as we went lower, I told you we may continue trading lower into the close. And we did get one more move lower during the MOC. That's how I did that. Okay? You guys with me? We're in the final hour. It absolutely ripped ass in the first 10 minutes. So basically the 2 o'clock macro just really ripped ass. So it's like, okay, it's already given you a bunch of evidence that it's going to go lower. And that's why it wasn't that hard to, oh, okay, we shat for 2 minutes. Oh, okay, 211. Hey, let me send this to Discord real quick. It's probably going to run those lows, huh? Because one of you mentioned that on stream, or a couple of you mentioned that on the stream, or Discord. I can't remember. Right? So then what do? Do we just short? No, we short on the way higher. Right. That is a 5-minute imbalance. That's a 1-minute imbalance as well. That right there is tradable. And I know some of you might not agree. Well, John, the fucking market, though, look at it, man. It's already traded like fucking 250 points lower. You're going to short that? Are you going to buy that? Are you going to buy that shit? Are you going to buy when there's equal lows? Are you going to buy inside of an imbalance that was formed on the way to liquidity? No. Remember the theme we've been talking about the last few days. If there is nothing stopping price, if there is no reversal signature, you have basically the probability that it's going to continue lower. So you already know where price is going to go. Right? Let's come back to the final hour in just a minute. Where are we going? Where have we been? Well, we got all these lows back here. Okay. We got some highs up here too. We sure do. We definitely do. We traded into a discount market, yes. But we traded even like massively discount. So guess what? If we're at 210 and there's only 50 minutes, left in the regular trading hours, you really think in that amount of time we're going to trade all the way back up for those highs? Or would it be more beneficial to seek bearish order flow for the lows? Where is it going? It's going for the lows. Where does it come from? The high of the day was up here. And I think that's a slightly higher high as well. So we had that and then the rip ass. So guess what? It's going lower. So you say, okay, where are we going? Lower. Now that we have the price aspect of it and the context of it, no problem. It should go lower because we also have a big ass, oh, I forgot to show you this. We also have a big ass what? AMD. Accumulation, manipulation, distribution, right? Oh, fuck. You didn't see that, did you? Big ass consolidation. We trade higher. That's the manipulation. Now we're trading lower. Now we're distributing shorts. If smart money is going to distribute shorts, where's it going to be? Below the very first new low made? No. Well, maybe. But not the majority. That ain't Terminus. Terminus has always been equal lows or low resistant lows. So that's where it's going. So you have your price. 44,562 is the lows. You have your context, AMD, equities open low, right? You have all that. Now the last portion of the law of high probability trading, according to yours truly, is time. Now you just need time. And I have given you the timing tools already. You have the open of the hour. We did not trade all that much above the hour. We traded into that imbalance and then absolutely shit the bed. Okay, well, it's already done its business above the hourly open. So we're probably not going to go back up there. We've already done it, and we did it early. Okay, well, at 210, what can we do at 210? Nothing. We got to wait for an up move. Okay, so what can we wait for? A new, what, 15-minute candle. Shorting above the open of the 15-minute. and holding at a minimum at least to 245, because at 244 is when it met the low. Time-based entry, time-based exit. And again, I don't want to sound like a dickhead. I don't. But show me your volume that confirms that. Where is it? What, I mean, is it a decrease in volume? Is it an increase in volume? Is it just stagnant volume? Like, what is it? I don't get it. What I do get is that price is spooling lower, order flow is bearish, and it's going to seek opposing liquidity. And it's going to railroad whatever indicator you're looking at, even if it's something else. RSI. Okay, what does that say? You know, is it overbought? Is it oversold? I don't know. Maybe it's oversold in here. Okay. And then maybe it stayed overbought all the way down in here, giving you false buy signals. It doesn't make sense to me, chat. I don't get it. But I do get shorting that and exiting there. Well, I had multiple exits on the, right? And again, full disclosure, this was paper. This was not a live trade, okay? So don't come in here, you know, with your fuckery, okay? This was a paper trade, okay? But look at this. 44,650. That's 2 points off the high. 2. New low, and I recorded this whole thing, by the way, so I'll share that later. And so on the way lower, I'm like, I'm taking one off here at that new low, minus 1 point, boom, 585, that's partial one. Go look at the time I sent those messages. Then I said, okay, 44, I didn't give you a price, but I did say that equities open low should be next. Not even 2 minutes later, boom, we get another. Go look at the time I sent those messages. And then I didn't give you this, but 44.50 was the next 50 level below the 44.562, right? Here's my evidence, chat, right? If we're going to make a case, here's my fucking evidence. Shorting that and getting out on the way lower. Why do you need volume if you can do this? That's my question. Well, I've asked like 4 different questions already, but you get what I'm saying, right? It's not to be an asshole. It's not to be a douchebag. I'm genuinely trying to understand. What do you see in volume? Help me get it. Because if it can't help you do this, what is the fucking point? You know what I mean? And that's it. Right there. I probably should have held one for the close, but you know, I didn't really plan on going over this today, but it's reiterating this idea that you're looking for shit in the wrong place. Oh, you did, Jordan. The chat, I told you guys to throw some 2s, and that shifted the message up higher. You can anticipate a divergence if you do it from a top-down analysis. It's some work, though. When volume divergence occurs, if you showed it a while back on stream. No, I think I've seen that before. Like, I've seen that, where price makes a lower low, and then either volume decreases or increases or whatever, and that... I mean, I guess. I don't know. I just don't... I don't see the same precision. That's all I'm saying. Now, daily, you know, I've called quite a few good trades on the daily, but not all of them on the daily have, you know, really been crazy. Like McDonald's. McDonald's kind of been fucking around a little bit. Google kind of fucked around a little bit too. Microsoft was nasty. But I'm just trying to understand. That's all. I'm just really trying to understand. So, I guess this run was kind of nice here. Those, what is that? AM session high, or no? Equities open, highs are up here somewhere. Well, intra morning session high, right there, slightly lower high. We trade back into the range. This I think was nice for the same reason I think euro is was nice, and I'll talk about that too. So this move here, right, from right there somewhere higher, that is, I wouldn't consider it spooling, I guess, but it's a buy program, right? Its price is being taken and repriced higher. It doesn't matter how many people are shorting the up candle or shorting that high or shorting Sunday's gap or shorting whatever. None of that matters. And it will absolutely run for liquidity despite whoever's standing in the way, because it's machine driven. Look, not to flex on you guys, okay? But there is a system that my car has. It's an ABS system. Maybe other cars have them. ABS, automatic brake system. So when I'm driving and I take my foot off the gas, my car will brake by itself. I do not have to put my foot on the brake unless I want to brake faster. But it has an automatic brake system. I can turn that off. I can turn that on. Right? It does it without my consent. Right? My foot's off and it'll just brake by itself, right? There's a program within the car connected to the engine, or at least I guess connected to the brake system, to brake even though I'm not touching it. It's automatic, right? That's what I think here. It is coded, it is programmed to say, all right, we're going to spit out whatever price this is, right? So 23,206.75 is the current price. All we're going to do now is take the number and drag it. All right, 207 and some change, 213 and some change, 224 and some change. We'll trade a little bit lower because we've got some imbalance price action. No problem, right? Little imbalance. We come back. Breakaway, another imbalance. We come back. And then we launch, we come back a little bit, and finally the surge, right, above the highs. It's fast and it's dirty, the way that I've always taught you that a run to liquidity is, right? It's not going to be casual. It's not just going to consolidate and drift and then just drift higher. No, it's going to start printing Corvette candles. Because it is coded, it's engineered. You know what I mean? The same way that you press a button to send a text, right? Hey, pick me up Taco Bell on the way home to your significant other, right? And you send that message, that's what you're doing. You're manipulating the keyboard to spit out letters. This shit is manipulating price to spit out what it has been designed to spit out. So give me just a second while I read the chat. Oh, good job, 2020. I was not, this was the beginning of the stream. I wasn't looking at this. We still have to go over Euro too. Don't let me forget. But that is also why I like this move here. And I'll just speed run this because I could talk all day. But we do have a low, right? What kind of low? An intermediate term low. Or if you scratched that one, if you use that one, that's an intermediate term low too. So we have an intermediate term low with low resistant highs. We trade into a premium and then probably 50% to launch. That's easy trade. That's so fucking easy, bro. That is so bread and butter setups, man. Textbook plays make for easy days. Same shit, different day, different week. You know what I mean? That's what makes trading easy. Now, the hard part, right? The hard part is the rest of it. Money management, risk management, patience, discipline, internal analysis, right? You know, shit like that. The technicals part, it gets a lot easier over time when you understand the things that I have continued to explain for many years now. Okay. But yeah, D, so that makes sense. Not using volume on like the last end of distribution. Well, yeah. That makes sense. So we can at least agree on that. I agree with that. Oh, and good job. You said, felt so confident holding since I saw your trading without fear video especially. But what about that video made you want to hold it? It's an extra confirmation. But how many confirmations do you need, G? If we have concepts, inverted concepts, we've got roadmaps, we've got intermediate term lows, we've got second stage accumulation. You know, we have low resistant highs with high resistant lows. You know, I mean, how long is your checklist going to be? Are we making a grocery list here, dog? Are we going to have 50 confirmations and line all them bitches up? Or do you just need like 2 to 3? Again, I'm just trying to understand. That's all. Remember the law of simplicity? I remember which one it is. It's like KISS. Keep it simple, stupid. The law of simplicity, right? So why have extra confirmations? Oh, okay. So see, now someone finally answered it. That makes sense. If there's a 1 minute mitigation and there's a volume spike, we can trust it. Okay. That makes sense. And yeah, that's my question. Why have extra confirmations? How many do you need? Is it 3? Is it 5? Is it 10? Is it 15? I mean, at what point do we say, okay, this is enough for a trade? It took all of like 3 seconds for me to send you a message. Oh, Dow's probably going to run those lows. All of 3 seconds. I saw the chart and went, yeah, we're going for those lows. It was that quick. It was that simple. And to be spicy, pretty fucking spot on. Because, like, Jesus, bro. This stuff is so simple. Okay? It's so simple. We're trading towards lows violently and aggressively in a time where it now is allowed to spool. It is allowed to trade in one direction for an extended amount of time. You have a whole hour. You missed the first few minutes, you've got the next 15-minute candle. You missed the first 30 minutes. You got the second half of the hour at 2:30. That's why I sent that message at 2:29 yesterday. I was being very cheeky. So if you weren't paying attention, you probably didn't short that. You probably missed out. That's why I gave the Discord at 2:11. I gave it to you early. So that means I care about you guys. That's what that means. Trading without fear is learning how to trade in probabilities. Yeah. One of the big things, right? It's thinking in probabilities, which means there's always going to be a margin of error. I could be wrong. We could blow through that imbalance and end up trading higher. That's a possibility. It absolutely is. And that's why we have, let's say, risk parameters. Okay, well, we shouldn't trade above that high or this imbalance altogether. So let's short that, stop at the high of the imbalance, and see if we can get those lows. Easy 1 to 2, maybe a little bit more. Easy. If you don't trust it that much, drop your risk. And that's why I put that in the video. What is there to, or I might have put that in the written content. What is there to fear when the risk is small? What is there to fear? So if you manage risk, you trade in the direction of opposing liquidity, and you think in probabilities, meaning, yeah, we could be wrong. That's why we use a stop loss. Where is the fear then? There shouldn't be. Can you start trading with $10? Fuck no. No. That's a waste of time, in my opinion. $10, you're better off just... You can't get shit with $10, bro. Yeah. You're better off, like, I don't know, getting a single from Wendy's and just eating a burger with that, honestly. So, oh, the euro. That's right. We got to go over euro. You guys don't let me forget. You guys always let me forget. You guys always let me forget. I know we covered a little bit of this already, but just to reiterate, right? We talked about this. What was yesterday's live stream? We were at 12 to 1. That's about right here, right? 12 to 1. We were right here yesterday. And we said nothing about that is bearish. This is also, I think D said this was a news, some sort of news high. I don't remember what was on the 16th. I honestly don't even care. But I know there's liquidity there, right? We drifted yesterday. So what does that look like to you? It's kind of it's more of a razzle dazzle, but this is also accumulation, manipulation, distribution. And I don't think I pointed this out earlier. That mitigation here, seen on the 1 minute. This right here. This imbalance here too. What is that also protected by? What is that protected by too? An intermediate term low. So you have an intermediate term low set that also took London's low, and then your retracement. Trading in the direction of opposing liquidity. That right there was around 9 o'clock, right? So 9 o'clock is here, right? Buying below the open of 9 o'clock. Boom. 9:54. Oh man, that's what we're going to end with. That's what the fuck we're going to end with. Oh no. Oh no, you're fucked. No, you guys are absolutely cooked. Watch this. Watch this. Are you paying attention? Hold on, John. Let me get off fucking TikTok. Why are you on TikTok to begin with? What's that? And what is that? Look at that. Look at that. There's no algorithm, right? There's no algorithm that runs for retail trader stops. Yet that the euro ran that bitch at 810. And we ran opposing liquidity at 954. Manipulation macro, TP macro, liquidity to liquidity. But there's no algorithm though. Really? We talked about this yesterday. 117.21, that was brought up by D in the chat, right? I looked at it, I was like, yeah, this is a good one. I like it. Right. Boom. Look at that. How easy was that? But there's no algorithm. Even though we took the low during a macro and we met the highs in a macro. But yet, again, I still don't get. You guys should investigate. What did the volume have there? You're welcome to show me. What did it have in here? You know, was there a volume divergence in there? Yes or no? If there was, let me know. I'd like to know. And then same thing with that. You know, did volume confirm that or not? For those of you that use it, let me know. But it's like, do you really need it? Is kind of my main point here. If you can get in sync with price delivery, what's the point? Yeah, I agree, Scott. What can you do with 10? Save another 15. Get the membership. That's funny. Joe, you can press the join button under the video. It's 25 bucks a month, USD. You can get the access to our Discord and market reviews, which one of them will be today. And I do reviews every Tuesday and Thursday for members only. And then sometimes I close the chat as well. And yeah, Felix, what do you mean you don't know how to write it? ITL, intermediate term low, or high, intermediate term high. Yeah, so the context is, it's not a Head and Shoulders, okay? It's not dandruff fucking shampoo. It looks like that, but there's way more to it. Because if every intermediate term high and every intermediate term low worked, then that's all you could ever trade. But it's knowing which ones are going to work and which ones didn't, right? Like say this one right here, for example. Oh, John, but that's an intermediate term high right there. And we did trade into that and then went lower. Why didn't it continue? For the same reasons I gave you yesterday. We have a big ass pool of liquidity up here. So it's not going to. We expect bearish concepts to get ran through, right? Ooh. I could end with a really good joke right there, but I'm going to hold myself back from that one because I'm trying to be a little bit more professional. Trying to. For the manipulation in volume to happen, we combine it with the market structure. Volume is the effort and candlestick is the result. Yeah, but you're, again, Josh, if you're looking at volume, you're only looking at the volumes on the exchanges. You're not looking at volume from the OTC level. And there's way more volume there. Again, according to ChatGPT, I don't know. Okay, I haven't done all that much investigation into it. And if we already know the lows are going to get manipulated because smart money is going to trade that, how does that help? I don't see that as turtle soup because we do have a low and then a lower low, but we don't have a low and a lower low that are both below the old low. That would be a soup to me, but that's not. To answer your question, Warrior. Josh, that is a great question. I'm pretty sure. It sounds to me like from what I've gathered so far and from just what I've seen, it looks like you guys, or the ones that use volume, I guess, use it to either confirm a low or a high, and then you don't look at it anymore to then trade concepts after that. Is that right, or am I wrong? Like maybe you went to the daily, maybe you saw some volume shit here, so you trusted longs to go higher. Does that sound right to you? Or am I missing the mark? You use volume to find a, or maybe even find a high, and then you say, okay, well, now that we've got that, now we can go into smaller time frames and you know, trade the other direction. Does that sound correct? Josh and Warrior said yeah. Critical said yeah. Kind of like how you use relative strength to confirm a lower high. Yeah. Okay. See, that makes sense. That makes sense. But if you're trading a correlated market, you can just look at its correlation. I don't know. That, again, that's just the way that I see it. You know what I mean? So whatever works, I guess. But I don't know. You guys should post trades. I want to see them. You know, I want to see them. But anyway, I thought we had a lot more time, but apparently it's been an hour. So okay, yep, studying it at the moment. Well, gee, let me know what you find. Let me know what you find. But the moment you find something better than that, you let me know. The moment you find something better than this, you let me know. And I'll listen. I'll listen. So, with that being said, y'all be good. Oh, look at those lines. Be good, be blessed, man. Like I said, I'll put out the market review later this evening. In a few hours from now, probably. We'll be here same time, same place on Wednesday, the 23rd. All right, for another free live stream. The main takeaway from today, chat. The main takeaway from today. What was it? The fucking Dow Jones. The main takeaway from today was understanding the final hour and understanding putting time, price, and context together. That blows everything out of the water. I know it sounds arrogant, but look at the entries and the exits. Look at them. Just look at them. They're fucking awesome. You have the 2 o'clock macro, the 3 o'clock macro, market on close, and the 215 and 245 macro. Or at least time window, I guess. Okay? So at a minimum, you learned something new today. At least. Right? So hopefully you guys can appreciate that. But that's going to be all from me. I will see you tomorrow. Don't do anything dumb.
bitch that love to suck dick.